Good afternoon, everyone. Hope everyone's having a great Saturday and is enjoying their time off, enjoying their weekend after that wild week we had in the stock market. Decided to jump on here and do a quick update on what took place last week and talk about some of the opportunities that I see and provide some insight on what can potentially take place, and also talk about some levels we might want to watch out going into next week. So let's get right into it. Before we jump into the charts, let's do a quick recap of what took place last week. So last week, there's a quick recap of what took place last week. We know the tariff announcement had that massive impact on the markets. No surprise, we had those two back-to-back days of gap down, and we dropped a total of close to 10% in those 2 days. We'll do a deep dive on the charts to get the exact figures, the global reaction to the market response, the economic impacts, investor guidance and strategy. We'll go over all these things. So to kick things off, let's take a look at the index's performance on the week. So Dow Jones was down 7.9% on the week, putting it down 9.9% year to date. S&P was down 9% on the week and is now officially down 13%. So this is the S&P index, and don't get this confused with the SPY ETF, right? So the ETF is a little different than the index, right? So the S&P was down 13%. Nasdaq was down 10% last week, putting it down at 19% on the year. MSCI was down 1.6. It's still up 6.6%. MSCI signifies the international markets, excluding the U.S. markets. So there's a clear outperformance on the international markets in comparison to the U.S. markets. 10-year Treasury was flat. Oil was down 9% last week, and it's currently down 12%. It's currently down 12% year to date. Last but not least, bonds were flat, and they're currently up 3.5%. So bonds are outperforming everything. On the sector front, on the weekly, communication services was down 6.2%. Consumer discretionary was down 6.06%. Consumer staples was up 1.5%. Energy was down 6.6%. Financials was down 4.96%. Healthcare was down 1.27%. Industrials was down 5.3%. Materials was down 4.1%. Real estate was down 1.47%. Tech got absolutely hammered, was down 7.7%. And last but not least, utilities was down 4.42%. So you can see there's a lot of money flowing into consumer staples, right? And seeking shelter in the consumer staple names, right? But overall, tech, consumer discretionary, communications, and energy took the biggest hits last week. So last week we did have a handful of catalysts that did have the impact on the markets. Of course, we had the tariff announcements. We had back-to-back days of sell-off. On Tuesday, we also had manufacturing PMI that came in above forecast and above previous reading. We had ISM manufacturing PMI that came in below forecast and below the previous reading. JOLTS that came in below forecast and below that previous reading. And the market had that slight reaction to that as well. On Wednesday, we had ADP NFP that came in above forecast, above previous month's reading, along with President Trump's speech after market close, and that's when we saw that massive push down. He showed the infamous tariff poster, and the markets completely collapsed, right? So haven't recovered yet. On Thursday, we had unemployment claims that came in below forecast and below previous reading, as well as final services PMI that came in above forecast and above that previous reading, and ISM services that came in below forecast and below the previous reading. On the fear and greed index, guys, the fear and greed index in its history, the lowest the fear and greed index has ever been was 2, and that took place on March 12th, 2020, and we know exactly why that was. That was because of COVID, a lot of uncertainty. So the fear and greed as of now is sitting right at 4. So there is just as much fear in the market, right? Or very close. The level of fear and pessimism in the market is very close to the levels we saw in March 12th, 2020, right? So ever since they started recording the fear and greed index, the lowest has been is 2. Now we're sitting at 4. So very, very rare for us to be sitting at 4. I want to bring some charts to your attention, right, to give us a bigger picture of the economy. So this chart right here, right, signifies the U.S. equities were under pressure, but international stocks and investment grade bonds have provided some support. So you can see all of these names down here. These are the U.S. equities. They are negative on the year, right? They have underperformed year to date. And the things that are really holding up are international stocks, U.S. bonds. They've provided some. They've acted like a float. They've been floating above what the market has been performing. So that's where a lot of money is headed to, the international markets and the bonds. Also, this chart right here, this gives you an idea of the disbursement of the reciprocal tariffs. Right, China will have the biggest tariff at 54%, Vietnam 46%, Thailand 36%, Taiwan 32%, India 26%, South Korea 25%, Japan 24%, and the European Union 20%. So these are some steep tariffs on some of these big names. And one thing is the average tariff rate is poised to spike following the reciprocal tariffs, of course. Right, prior to the announcement, the tariffs across the board were below 5%, right? And now with that announcement, we're going to skyrocket all the way above the 1931 levels, okay? So we haven't had reciprocal tariffs or tariffs at this high of a rate since the early 1930s. So this gives us some context in U.S. history. The last time we saw these kind of tariffs at these rates, last time was between that 1931 and 1935, and as of now, we're headed back into those levels for those reciprocal tariffs once they take effect. So going into next week, the things we're going to pay close attention to is we have FOMC minutes 2 p.m. on Wednesday, April 9th, CPI on 8:30 a.m. on Thursday, PPI on Friday, 8:30, and the preliminary U.S. Consumer sentiment data, right? Also, something you want to monitor very, very closely is I wanted to bring to your attention. China, U.S. will face tariffs 20%, 34%. So starting April 9th, some of these tariffs will start taking effect. So we got to pay close attention to that April 9th date. Right? So looking into next week, we don't have much on the earnings, but earnings season is slowly kicking off now, and the banks are going to lead the way. So again, this is perfect, because the banks are going to set the stage. We can get some commentary from what they say in those earnings calls, and that's going to really set the tone for what the market is going to feel. How are they going to respond to the questions? How are they going to respond to some of the questions that are presented, and what is the guidance they're going to give, if there is any guidance, if they're going to sound optimistic, if they're going to sound pessimistic. That's going to really set the tone for the earnings season. Right, so banks, we got banks reporting on Friday. Some big banks, we got J.P. Morgan, BlackRock, and Wells Fargo. Outside of that, everything else is the smaller names. So all eyes on Friday and what the banks have to say about it. So some key levels I want to bring to you here on SPY. This SPY's chart. This is the daily time frame. This is the weekly time frame. This is the monthly time frame, and this is the quarterly time frame. Going into last week, we talked about, so during our live show, we go live every single day at 9 a.m. with a pre-market program followed by a live trading program, right? So make sure to tune in. So during our pre-market program, we talked about on Monday, actually, right? When we were about to start a new quarter, we talked about how this is very reminiscent of 2022, right? So if we look at the action that took place in 2022, as soon as we opened up in 2022, we went 3 down on the quarter, which simply means we took out the previous quarter's highs. We took out Q4's highs in 2022, and then we took out the lows simultaneously. And then going into Q2 of 2022, we aggressively sold off, broke below the Q1's level, and continued to sell off. And look what we're doing as of now, right? As of now, we're following the exact same pattern like we did in 2022, and we sold off for the first 3 quarters of the year, right? We sold off for the first 3 quarters. After those 3 quarters, that's when we saw that massive push higher, and we were able to stay above that 20 on the quarter, that 20 EMA on the quarter. So guess what, guys? We're going to continue to monitor this. We're going to see if we even get close to that 20 EMA on the quarter. That would put us at 455.26, but keep in mind that's going to be continuously moving higher, right? So in that territory, monitor that 20 EMA on the quarter. If we do continue to sell off and continue to monitor the quarterly chart, it gives you an opportunity to kind of zoom out, right? When in doubt, zoom out and try to see the bigger picture. When we laser down into the into the monthly time frame, this is the 2022 sell-off. We were down 27%. Right, at our lowest, we were down about 27%. We came into that 50 on the monthly, and that 2022 high was right at that 480.34. That 480.34, that 2022 high, pretty much lines up very closely with that 50 EMA on the quarter. And if we do continue to sell off, and if we can't hold 500, we might come into that 480.34, guys. We know how fast price moves, especially the past handful of days, right? It's very, very important for you to come in and watch our pre-market program. We break down price every single day. We do a detailed breakdown, and we follow SPY. We know SPY like the back of our hand. So when there's days where volatility is increased or when volatility is decreased, we can already map that out. So very, very at this current rate, if we do continue to sell off, right? A big if. Don't be surprised if we work our way into that 480.34, potentially push into that 467 at the lows, right? And that 480.34 signifies the top, the highs of 2022. Keep in mind, in 2022, we sold off for 27.6%. If you look all over the place, people are talking about this is like COVID, this is like COVID. But let's not forget, before we even get to the COVID sell-off, right? We had a sell-off 2.5 years ago, or 3 years ago now. Right, we had a sell-off just 3 years ago, and that was to the 2022 sell-off. So before we start talking about the COVID sell-off, let's keep in mind what the 2022 sell-off looks like. So now when we laser in, so you can notice we're going from the highest time frame, that quarter, we're going to the monthly, we're going to the weekly now, okay? So on the quarter, very bearish, a lot of selling pressure, right? If there is good news, this quarterly candle right here is composed of 3 months worth of data. So April is not even closed. We're in the beginning of April, so we still have 2 more months of data and a good chunk of April before this candle closes. So we still want to see what takes place there, right? So this monthly candle, of course, that's going to be that April candle, but aggressive selling on the month. Look at that weekly candle, guys. We talked about how we went 3 down last week, and if those lows don't hold, that weekly downside breaker can present a beautiful opportunity to the downside. And we sliced right through that 511.17, and we sliced. Now we're between that 495, right? That 495 target down here. We haven't encroached that yet, but we're in between those two critical lows, right? The 511.17 low, right, came in around September, and that 495 low came in around May, right? May of 2024. Right, so very, very interested to see what takes place. And now when we laser in further, look how ugly those 2 days of selling are. All right, look how ugly those 2 days of selling are. Massive gap, and before you know it, we essentially dropped in total close to over 40 points in 2 days, guys. In 2 days, over 40 points, right? We evaporated, we wiped out a lot of the gains we saw for many, many months. So if we look at this quarterly candle right here, we essentially wiped out three quarters of gains, right? So very, very important to see what takes place here. So again, guys, make sure to join the Discord, join the community. I have that sale, $24.99, right? These are some of the features before we get into the charts. I want to show you how valuable it is to be in this community. We prioritize on 1 hour trading using SPY and ensuring that you have the high probability setups to get you past that, to make you consistently profitable. So I have a ton of resources in the Discord, right? It's going to be an early member special, so make sure to take advantage. And you also get that ebook. Okay, so now let's get right into the charts. Okay, let's get right into the charts. We'll go over some tickers. If you have any tickers, drop your tickers in the chat. Make sure to like, guys. Make sure to subscribe. And let's get right into it. If you're a first-time viewer, let me know where you're joining from. And make sure to answer that poll question as well. So this is that quarterly candle, guys. We talked about, right, sell block, full body quarterly candle. We'll have that in the back of our minds. That quarterly candle still has a good chunk of April and 2 more months. So we're just gonna put that in our rear view. But I want to primarily focus on, but it gives us good context, right? I want to primarily focus on, look at that monthly candle, right? I want to primarily focus on this weekly candle right here, right? Because Monday, as soon as Monday opens up, we are going to open a new weekly candle, right? And that weekly candle is going to be composed of 5 daily candles. So if that daily time frame looks a little crazy for you, just zoom out. Possibly look at the weekly candle, right? So that weekly candle right here, the lows of this weekly candle right here, right? The lows of this weekly candle right here are 495.43. So this is not including the intraday price action and the pre-market high, pre-market low. We'll get into that, but I just want to give you some context here. So next week, if SPY opens up and we break below these lows, right, there's a good chance we can continue to sell off as long as those lows are respected. We trade below them where there's a good chance we can continue to sell off and possibly entertain those psychological levels like 490, 495, 485, so on and so forth, right? And that weekly target, I'll give you all the targets, I'll give you all the levels when we look at the intraday chart, but I want to give you an idea. Say, for instance, scenario one, right? Let's lay out 3 scenarios. Scenario one, we open up next week, we break below these lows, we continue to sell off. Okay, so that we know what the protocol is in that case. And that case is just continuation. As a continuation of the sell-off. Scenario 2, okay? Scenario 2. Good afternoon, Mercury, from Hood, Florida. Good afternoon, Exelder, 450 boys. Yep, we'll see. Right, but so scenario 2, scenario 1, we have the continuation of the past 2 weeks. Scenario 2, we go inside the entire week. So what that means is we open up. Maybe we have a gap. We gap up on Monday. We get some of the CPI, PPI data, and we just kind of hold within last week's range. We just chop. And then what that means is we're just consolidating and the market is digesting for a week, right? When the market is digesting for a week and we're inside the previous week's range, what that potentially means is now, if we stay within that range, the following week, right, the market is tasked with breaking out in either direction. Right, so a lot of traders can get trapped when we're inside. So monitor that very carefully. If we have that continuation, if we break below those levels, more than likely we're going to continue. If we don't break below that previous week high and that previous week low, and we just chop inside, maybe try to fill some gaps and maybe just move side to side a little bit. I know those are massive ranges. We still can trade those, and I have a mechanism to take advantage of that. That can be one scenario, and another scenario is somehow, some way we're just bullish. Buyers just step in. There's just a massive rally to the upside, and we take out that weekly upside breaker, right? And possibly there's a chance that we can push to the upside. So the most out of those 3 scenarios, the most likely one to occur, right, from my experience, in my opinion, again, there's not financial advice, is we take out these lows, we continue to push lower, and possibly look for accumulation breaks on the hourly and the 4 hourly and the 4 hour to the downside, right? And I'll break that down further, right? So that's what I'm looking to see as far as on the weekly, so on and so forth. To give you more context, this is what we look like on the other indexes, right? And let's go to the 4 hour, put the drawings back on. And if you're a first-time viewer to the channel, make sure to subscribe, guys. We go live every single day. Comprehensive pre-market program, followed by live trading, live education. Monday is episode 21. We've been consistently profitable, trading live with a live audience, live education. The primary thing here, guys, is I emphasize the importance of education, right? Education before everything, right? So when we put these drawings on, and let me slap the extended hours as well. Let's go to the 4 hour. This is where we are, okay? This is where we are. This is where we are. Massive sell-off, right? I was primarily paying attention to that 508.04 and that 510.55. If we broke below those lows, so going into next week, like I said, right? If we start accumulating, right? For instance, if we start accumulating in this fashion and we can't get back above that, if we start doing one of these maneuvers, right? Keep in mind, we have some high catalyst data, right? We have the CPI, PPI data. So those things can be fuel for whatever scenario they decide to use. So if we start getting bought up, the primary thing I'm going to pay attention to, guys, is if we can push higher, slam into that 510.50, slam into this previous zone, and then have tremendous weakness, and possibly break that accumulation and continue for another leg lower. Okay, this sell-off right here, we haven't had a leg. We haven't had a pause in the action. It's just been all selling. Continuation. There hasn't been any pause in the action. Anyone that's buying is underwater, right? They're underwater. They have to cover. It's just a pure sell-off, pure continuation after continuation. Not even a single bullish candle, right? So a scenario that I like is, hey, you know what? Maybe some signs of life. We accumulate, we break down, we break below that weekly downside breaker, so that the previous week's low, and we potentially work our way into that 505, 510. Right, we're below 510. We closed below 505 last week, and maybe work our way to that 500 psychological level. Right, so rejection out there. Maybe we work our way back lower. If that 500 psychological level doesn't hold, we're going to get some contention there. We can see a potential slide into that 495. Right, so very interesting how we play that. If we reclaim this zone, right? If we reclaim it and we get back above it, we can use that as a reclaim, retest, push higher. And if we kind of laser in on the hourly, we can kind of see we've been hugging that 9 EMA. This trend is so strong on the hourly, it hasn't even got back above that 9 EMA, right? So that's the primary thing I'm going to pay attention to see how that plays out. So these levels right here correspond very well with the rest of the indexes, right? You can see we're in that key zone right there. If you take a look at the Qs, for instance, that's so QQQ. Right, let's throw the. Keep it simple, guys. All the noise that's going on is just a distraction. Focus on the charts. Focus on the data. Again, I've been saying it over and over again. If you're a long-term investor, if you're looking to initiate a long-term positions, it might be time to fire up your long-term portfolios. Right. It might be time to consider what's on sale, what you like. So the QQQ is right between that 420 and that 423, right? So initially, we had a massive reaction off that level. We're back in that level. We've been selling off. So if we are going to get some sort of reaction, right, that reaction can be a catalyst for price to accumulate and break down further. If we slice right through that, continue to push lower, 413.21 is the next pivot lower, right? We have to just play it by the pivots, guys. We have to play it by the pivots. Right. So that's how I see it. So if we look at the Dow, similar thing, right? Similar thing. Same thing with the Dow. Same thing with the IWM for the Dow, that level. So that key zone on SPY corresponds with that key zone on the Dow. It corresponds with the key zone on the Qs. So if all three of those indexes, right. So we're basically monitoring the interaction between those three indexes and those key zones. The Dow is at 383.60, 385.06. Very critical to see what takes place at that point. So right now, the beautiful thing is, during our live trading show, we're primarily scalpers, right? So since we're scalping, we're in positions for anywhere from 1 to 5, 7 minutes max, right? Anything beyond that, we're going to be in it with a runner. We don't care which side the market is moving. We don't care if it's moving lower. We don't care if it's moving higher. Right? We can entertain both possibilities. But I'm just giving this breakdown. Right? There's a lot of pessimism. There's a lot of fear. There's a lot of angst going on. I'm just giving this breakdown to give us some context of where we are. Are we going to ignore the fact that we dropped this fast to these levels in such a quick fashion? Right? No, we can't disregard that. But again, let's try to see the forest from the trees. Let's try to see the bigger picture. So these are great areas to pay attention to. We're down pretty significantly, right? If you take a look at SPY, before I get into the key levels for the week, right? SPY, if you're curious to know how down we are in relation to the 15%, 20%, 10% markers, that 15% down is at 521.27. SPY is not 20% down yet. If SPY gets below that 490.74, we will officially be 20% down. On the other hand, the Qs have been aggressively sold off, a little more than SPY, right? Because tech has been hit harder, right? The Qs are down beyond 20%, and that threshold is at 432.65. 432.65. As long as we stay below that 432.65, we are experiencing a 20%. This is not a correction anymore. The Qs are in bear market territory. Okay, remember the correction zone is a mild correction, 5%, pretty decent correction, 10%, right? A deep correction, 15%, and then anything beyond 20%, is bear market territory. So right now we're sitting between that 20% and that 25%. So we're getting into that bear market territory on the Qs. SPY, we're not there yet, so we'll monitor that. So with that being said, let's go take a look at some individual names. If you have any chart requests, feel free to drop it in the chat. Right? Good afternoon, everyone. Okay, so let's do some. Let's go over some key names, and then I'll go over SPY, the intraday technical levels, and then we'll wrap up. Make sure to hit the like button, guys. Hit the like button. And 45% of you are pessimistic, right? 45% of you on the poll are pessimistic of what took place last week. So far the dollar is down. The dollar is at 102. VIX is at 45. U.S. 10 years at 4. The 2 years at 3.6. U.S. oil is at 62. Gold is actually pushing higher, slightly pulling back. Bitcoin's at 83,000. IWM 181. DIA 383. SPY 505. Just 2 weeks ago, guys. Just even last week, on Wednesday, we were trading at 565 territory, if you remember. What a change 2 days makes, right? So we go from 565, 560 to 505. Qs 422, EFA 75. So let's take a look at some of the heavy hitters here. NVIDIA is down and is below that 100 psychological level. So a lot of people are underwater on this position, right? A lot of people that are buying the dip every time it dips, right? And are not paying attention to the key technical levels. They're probably underwater on this position, especially with options, right? Swing trading options and using leaps is a different animal, right? It's a different animal. You have to know exactly what you're doing. So NVIDIA, interestingly, guys, NVIDIA, if we take a look at NVIDIA on the weekly, NVIDIA is sitting in this very interesting area. It's a pretty wide range, right? Granted, it's between that 91.12. We'll dive deeper to find that exact range, right, to highlight the key levels. But between that 91.12 and that 97.29, NVIDIA has previously had massive reactions off those levels, right? So NVIDIA, anytime NVIDIA is under 100, keep in mind NVIDIA did have that stock split. Think of that 100 as that 1,000. I had a 10-to-1 stock split, right? So from a monetary standpoint, okay, it might seem like NVIDIA is $100 is cheap, but if you look at it, if you look at the entire picture, it's $100, but really it's $1,000. There's just been a stock split, and the shares have been divided by 10. Okay, so keep that in mind. Just because a stock, quote unquote, seems cheap, it doesn't mean it's cheap, right? You have to be able to distinguish its price from its value. Very important for you to understand that. So again, NVIDIA's in this critical area. You might want to entertain and pay attention to NVIDIA in this territory between that 91.12 and that 97.29. Previously, when we came into this level, we couldn't get above it. Aggressive push to the downside. Once we got above it, we pushed all the way, right? That's when we pushed all the way into that 139, 140 territory. We came back down. We pushed all the way off of it again, right? It took a few months, and we made that new all-time high. So big question here. What takes place here? If this level does not hold, more than likely, we're going to potentially slide into that 75, 80 territory, guys, right? So NVIDIA, this level needs to hold. And if we look at it on the 4-hour intraday, this is what it looks like. Clear downtrend. Clear downtrend. We're making those lower lows, lower highs, and we're in the zone right here. So all eyes on this zone. Do buyers step up? if you're looking to take this back to the upside, don't buy something just because it's cheap. If you're looking to take this back to the upside, at least get some sort of reversal, get some sort of higher high, higher low, right? And then when you get another higher high, take that new higher low for potential push into another higher high. So this trend needs to be countered. This trend needs to be countered. Use confirmation, use your confluence, but you cannot deny that this is a massive downtrend to the downside. If we identify some support and resistance here, we can see we're pretty much abiding by these lows here, and we kind of violated and went outside of this right here. So we're overly extended, right? So first touch, second touch. So first touch, second touch reaction, third touch reaction, fourth touch reaction, fifth touch reaction, sixth touch reaction, seventh touch reaction, now eighth touch, lining up in that zone, right? Very, very interesting to see what takes place here. If this level doesn't hold, we can see a continued slide and a break of this downward structure, and possibly starting even another trend to the downside. So very, very important. I wouldn't be surprised if buyers start stepping in here and we start at least pushing higher and accumulating. So NVIDIA, very, very interesting where it's currently sitting. If we take a look at Apple, so pay attention to those levels. If you take a look at Apple, let's see the damage that's been done on Apple. Look at these weekly charts, guys. These weekly charts are absolutely atrocious, right? Right. They're beautiful if you're a bear, but if you're someone who's looking for things to go to the upside, this is absolutely atrocious. Again, Apple is coming into this support that has been respecting for a long time, and this stems from a long time, guys. If we kind of zoom out, right now I'm currently on a monthly time frame, right? This uptrend stems from COVID. 2020, January 2023. We had April 2024, and guess where we are? We're back on that trend line, right? We're on that trend line support. Again, so very, very critical what takes place here. Does this candle look promising? It looks promising to the downside. That kind of candle is as weak as it gets. So let's see if we can at least get some sort of relief bounce. At this point, guys, the risk reward, if you think about it from a risk reward standpoint, the risk reward favors an upside move. Very, very risky to take anything back to the upside, but if it works, right, you can see a quick 2, 3, 4% recovery. And sometimes that's all you need. You don't need to hold this thing forever, right? So very, very important for you to measure risk reward at this point and say, is the risk reward more favorable to continue to lower, or is the risk reward more favorable for us to push back higher, possibly get a relief bounce, and continue to slide lower? You can take advantage of both, right? You can take advantage of both. So very, very interesting to see what takes place with Apple here. We're currently at that 188, testing that support. If we break, we have that 200 on the weekly, guys. The 200 on the weekly is sitting right at that 177, right? Aggressive drop off on Apple. Next thing I want to take a look at is Tesla. Tesla is trading at 239, guys. Right? Tesla is trading at 239. Again, if you have any chart requests, make sure to drop your chart request in the chat, right? And if this is your first time on the channel, right, this is kind of out of our normal schedule. What we do is we live trade, right? What we do is we live trade and pre-market prep every day for free, 9 a.m. We do the pre-market prep show followed by live trading, right? And again, if you want the exact entries, exits, and all the education material in the Discord, make sure to take advantage of that trial, right? Only $24.99 a month. It's an early member special for the entirety of April, so take advantage of that and come join us there. Just to give you an idea, we'll get back to it. Last week, on Friday, all three trades worked out. A ton of people made money off those trades. And my primary objective is, if you are in our Discord or my Discord, or if you're tuning into the channel, the whole point is to ensure I have the most consistently profitable community on YouTube and in the Discord. Everything else doesn't matter, right? Consistency and being consistently profitable is the name of the game. And I provide the resources, the tools, everything you need to ensure that you can unlock it on your own, right? It's not just you take these signals and do what I do. It's giving you the tools, the resources, and the educational material you need for you to really consistently be profitable week over week, month over month, quarter over quarter, and then year over year and beyond, right? So I'm walking you through that step by step. So Tesla on the weekly, we can see how aggressive it is, and Tesla's coming to that 200 on the weekly, guys. Tesla's coming to that 200 on the weekly. Tesla did pump all the way into 488, right? That was the all-time high. It's currently at 239, under that 240 psychological level. If we take a look at it on the daily, very, very ugly. Tesla's kind of in the middle of nowhere. In a sense, if we take a look at this broader trend, broader channel, right? You saw how NVIDIA was at the key zone. You saw how Apple was at support, right? Tesla's kind of in the middle of nowhere, okay? So if it continues to sell off, I would be interested in Tesla here if we continue to sell off. Let's see if Tesla was sitting right here, right? And I'll give it a stab back to the upside for a quick trade. But it's kind of in the middle of nowhere. If we actually try to get an accumulation break, that would probably be a little bit more sensible, because that's that weekly candle. Who sees this, right? So if we get weakness, continued weakness in the markets, and we break below that weekly downside breaker, that weekly low, like I talked about earlier, Tesla can slide and break down. There's a beautiful short setup on Tesla. Make note of that. Once we break this trend line here, we have continued weakness across the board. Tesla can slide and possibly get into that 220 and 215 territory. Currently it's at that 239, right below that 240, right? And when you're trading these conditions, a lot of traders have been hitting me up and saying, hey, you know what? The contracts are expensive. I'm not doing so well. If you're not familiar to trading in these kind of conditions, don't participate. Sit on the sidelines. If you want to learn, you're going to have to size extremely down, right? Just use half the position size or a quarter of your position size. Because I promise you, the last thing you want is you don't want to get caught up in the storm, blow your account, and when everything starts moving to the upside, you have no dry powder to participate. Okay? So very, very important. Very, very important for you to understand this. This thing is going to turn around. We just don't know when. And eventually, when it does turn around, you want to have enough dry powder to deploy to take advantage of back to the upside, right? So don't get too excited and blow all your money and your capital trying to be right and capitalize on something when the bigger opportunity is still awaiting you. Okay, so keep that in the back of your mind. So Tesla, again, if we have continued weakness across the market overall, I like Tesla to the downside. Slam that thing to the downside. Meta 504. So of course that 500 psychological level is sitting right there. That's going to be really, really interesting. So Meta on the daily, Meta is below the 200. Let's look at that weekly. Ooh, that weekly looks ugly. Right. So Meta is below the 50 on the weekly. The last time Meta was below the 50 on the weekly was during that massive, remember that sell-off Meta had in 2022? So Meta, again, Meta needs to pull back a little bit more. If Meta was all the way at this 388, that's definitely a steal, right? That's definitely a steal. So very, very important to see what takes place there. So Meta, that's how Meta looks. Lilly, Eli Lilly, so the biggest, one of the biggest healthcare names, or the biggest healthcare name there. Lilly is also in a very, very interesting place. So Apple was at an interesting place. NVIDIA was at an interesting place. And Lilly, right, is at this very, very interesting place as well. So Lilly is at this key zone, right? If the market decides to bounce, XLV Healthcare has some strength, we can see a potential bounce on Lilly. So between that 713.28, 728.92 is a very wide range, but that's something you need to monitor, right? If the market continues to sell off, Lilly slices right through this territory, we can't get back above it. We might retrace, reject, continue to slide, right? That's the bottom. That's like the bottom falling out on Lilly. So again, NVIDIA, Apple, Lilly, they have these critical key levels they must hold. Also, Microsoft hasn't been moving too nicely. It's just hasn't been moving too well. Microsoft is quickly approaching that 200 on the weekly. Palantir, right? My favorite stock in 2024, Palantir. Let's take a look at Palantir. Okay, Palantir is in this interesting place as well, but I need Palantir to pull back slightly. All right. So with these pullbacks, what I'm looking to do, me particular, again, this is not financial advice, is to take leaps off of these levels. Okay? So those are contracts that have a year plus until they expire. So Palantir, I'm interested in that 63.42, 65.56 territory. 63.42, 65.56 territory. If it comes into that level, that 50 is right there, right under it, two areas of confluence, dramatically increase the probability of this trade working out. Comes into it, I'll be there to put some risk on in that area, right? So very, very, very interesting to see what takes place there. So let's go over the key levels, the intraday key levels, and then we will wrap up the stream. So these are the most important key levels you're gonna have to write down or take a screenshot of. And if you want access to those key levels, again, join the Discord, and you have super charts. So whatever I do on my charts is reflected on your chart, right? So all the charting is done for you. It's a really, really cool feature TradingView has. So let these charts open up. I don't know why they're slow. Make sure to answer the poll question, guys. So key levels for next week. Key levels for next week. So primarily, the objective of a SPY Striker Discord group is 1 hour trading. 1 hour trading. Getting our work done within an hour. Preferably 15 to 30 minutes. Right? Preferably 15 to 30 minutes. That's our objective. Get our work done early, be prepared, take advantage of these opportunities, and wrap up our day. Try to be as efficient and effective as possible. So the key levels intraday. Very, very important levels that must hold up. So this is SPY intraday chart on the 5. So very, very critical. So you can see even in the aftermarket, right, we did push into 502, guys. We did break below that weekly downside breaker. So nonetheless, that 505.07 is that weekly downside breaker. That 510.36 is that quarterly downside target. That 515.47 is that daily 50% retrace, right? If any trend reversal can possibly take place tomorrow, we need to get above that 515.47 for a sustainable push higher, right? That's the primary level you need to pay attention to. Key levels below us. Key levels below us. If we continue to sell off, these key levels down here present great opportunities for little bounces, or present great opportunities once price slices right through them for retrace rejects. And there's a ton of them right here, right? They just all converge. So there can be a lot of traffic down here, and a lot of contention can take place, right? So between that 499.59, close to 500, basically 500 psychological level, we have the monthly downside break, monthly downside target. We have the daily downside target at 497.57, the weekly downside target 2 at 495.54, and the quarterly downside target at 493.92. So we start hitting these weekly downside, quarterly downside, and monthly downside targets. That means price is overextended, right? When we start hitting these target 2 and 3 and 4, it's an overextension because we already hit the first target. So that means there's a good likelihood of where we can have aggressive reactions off these levels back to the upside like a rubber band, right? Just a temporary bounce. So pay attention to those key levels down there. Also pay attention to that 537.75. That level is so important because that is the yearly open. Okay, that is the yearly open. That's the level price opened up. Anytime we're below that level, we are red on the year. Okay, anytime we're above that level, we're green on the year. Okay, and keep in mind we took out the yearly high this year. We made all-time highs. So on the quarterly chart, on the yearly chart, okay, we are actually directional to the upside, which means we took out that upside. We failed to hold. We got back above the previous year's highs. We're continuing to slide, and now we're below the previous year's 50% mark. If you measure the 2024's high, 2024's low, and do a 50% retrace, we're below that 50% retrace after taking out 2024 highs. So what does that mean? That means there's a good chance or the possibility of us taking out the lows is there as long as we stay below that 537.75, right? So very, very important for you to pay attention to that. So again, guys, those are the primary key levels I wanted to go over. I wanted to just to give you some information, equip you with information. The more information you have, or the more good information you have, the better decisions you can make. So again, guys, make sure to subscribe, make sure to like, make sure to tune in Monday morning, 9 a.m. for our pre-market prep program, along with live trading in real time, and I'll see you guys there. If you're a first-time viewer, hit the subscribe button. Let me end the poll here. Gives us a good idea. 40% of you here are pessimistic, right? 40% of you are pessimistic. Again, guys, if you're in the Discord joining on YouTube, we're going to continue in the Discord, and we're going to have a group meeting there. We're going to go over a couple of more things in detail, address some of your concerns, and we'll take it from there. So thank you for tuning in, guys. Have a great rest of your Saturday. Enjoy your Sunday. See you on Monday. We'll do battle on Monday, continue to dominate these markets. God bless.